Good morning and welcome to today's market briefing. Let's start with the key signals from Wall Street overnight. The three major indices closed nearly flat, with very little movement during the session. The Nasdaq finished at 26,269, the S&P 500 at 7,572, and the Dow at 52,658. However, the pre-market futures tell a different story. Nasdaq futures are down nearly 0.9%, S&P futures are off by more than 0.3%, and Dow futures are essentially flat. This points to a weaker open for U.S. stocks today. At the same time, the VIX, often called the Fear Index, rose to 16.24, up more than 3.6%. That's a notable move from the low volatility zone below 15 back into a more normal range. Market sentiment has shifted from greed to caution. Now let's talk about a few notable stock moves. Air Test Systems surged more than 21% over 2 days. The reason is that the company received a follow-on order for CoAS testing equipment from a major AI chipmaker. This comes as TSMC's CoAS capacity is fully utilized, and the company raised its capital expenditure guidance in its latest quarterly report. Demand for advanced packaging and testing equipment is clearly booming. While the stock has already moved sharply higher, it represents one of the most certain beneficiaries of the AI capex cycle, specifically in the bottleneck area. If the stock pulls back to support levels like the 20-day moving average, it could be worth watching. But chasing it at current levels carries significant risk. On the flip side, POET and AXTI have each fallen more than 40% and 50% respectively over the past month. The declines are driven by the U.S. Commerce Department expanding semiconductor export controls on China, insider selling by executives, and deteriorating fundamentals. There are no signs of stabilization yet, so these are best avoided. Let's move to the global macro picture. The yield on the 10-year U.S. Treasury note is at 4.59%, continuing its upward trend. This follows hawkish comments from Federal Reserve officials, including Governor Christopher Waller, who said inflation risks persist and interest rates need to stay high. Rising yields put pressure on growth stock valuations, especially for unprofitable small-cap tech names. The VIX, as we mentioned, is at 16.24. That's within the normal 15 to 25 range, but the intraday move from 15.65 suggests rising anxiety. If the VIX breaks above 17, risk appetite could contract further. The US dollar index is at 100.66, up slightly but still in a weak range. It's stabilizing for now, but if the index moves back above 101, that could trigger capital outflows from emerging markets. Crude oil is trading around $80.50 a barrel, supported by OPEC Plus production cuts and geopolitical premiums from the Middle East. But resistance above 80 is strong, so upside is limited. Gold fell below the $4,000 level to $3,986.50, down more than 1%. Rising bond yields are hurting non-yielding assets. If gold continues to slide toward $3,950, that could trigger technical selling. So where does this leave us? The global market is on the edge of a risk-off shift, but we are not yet in full panic mode. The core tension is between rising bond yields and strong demand for AI hardware. The trigger to watch is if the VIX breaks above 17 and Nasdaq futures widen their decline to more than 1.5%. That would confirm a risk-off regime. Now let's look at the external environment for Chinese assets. The dollar-yuan exchange rate is at 6.7585 onshore and 6.7706 offshore, a slight depreciation but within a narrow range. The negative interest rate differential between China and the US is deepening, which puts pressure on the yuan. But the People's Bank of China is keeping the fixing rate around 6.75, so short-term depreciation is contained. A stable yuan helps slow northbound capital outflows. However, if the offshore rate breaks below 6.80, foreign capital could exit more quickly. On the regulatory front, the U.S. Commerce Department's Bureau of Industry and Security added 2 Chinese semiconductor equipment makers and 4 AI chip design firms to the entity list. This strengthens the case for domestic substitution in China, but it also hurts U.S. semiconductor companies with exposure to China. For today's A-share market, a lower open is highly likely. U.S. stock futures are down, bond yields are rising, and the A-share market already fell more than 1.8% yesterday, so the sentiment is bearish. The failure condition to watch is if northbound capital records net buying of more than 15 billion yuan in the first 30 minutes. That could help the market stabilize after a weak open. Looking at the Shanghai Composite, it closed yesterday at 3,882 points and may test support around 3,850 today, which was the low from March. The Chi-Next index fell nearly 3% and is technically oversold, but a rebound will need external risks to ease. If the Shanghai index breaks above 3,930 on strong volume, that would signal the end of the short-term correction. In terms of sectors, AI hardware and semiconductor advanced packaging and testing could be active today. The order news from AEHR directly benefits the CoWES supply chain in China, including names like Tongfu Microelectronics, JCT, and Huatian Technology. The new BIS rules also reinforce the domestic substitution theme. On the defensive side, utilities and power stocks have been holding up well recently. They offer low valuations and high dividends, making them a safe haven during uncertain times. On the risk side, avoid small-cap tech stocks with exposure to China's semiconductor materials. The sharp declines in AXTI and POET show that geopolitical risk is being repriced. Also, high-valuation growth stocks with price-to-earnings growth ratios above 2 and no earnings support are most vulnerable to rising bond yields. As for northbound capital, net outflows are likely today. The combination of a stabilizing dollar, rising bond yields, and new tech export controls will push foreign investors to reduce their A-share tech exposure. If northbound net outflows exceed 30 billion yuan in the first 30 minutes, that would add downward pressure on the index. Let me wrap up with a clear direction. With bond yields rising, the VIX moving up, and export controls tightening, the A-share market should prioritize defense today. The 2 lines of defense are AI hardware and utilities. Our probability assessment for today is 15% for an up day, 40% for a sideways move, and 45% for a down day. Stay cautious and focus on quality names.